Hi, this is Acme with the US stock highlights for Friday, the 27th of November. Starting with Aurora Cannabis, which has become something of a favorite, largely because it's gone up over the recent past. We had the gap through the 50-day moving average, quite a severe pullback, but I suppose 50% was not out of the ordinary in terms of these sorts of things. But perhaps the highlight here, actually, the gap higher this week through neckline resistance around $7.50. And now we're actually threatening to have a weekly close above the 200-day moving average, rather, at $9.90. If we can get that, then we're looking for a retest of the initial November resistance around $14.48, hopefully over the next couple of weeks or less. Next stock is one which is relatively new to the highlights. Has been around, I think, maybe once or twice before, but hasn't been here in the recent past. Here we've got Fstx Therapeutics breaking multiple neckline resistance there from September around the $6.20 level, and then lastly at $6.24, so above that on an end of day close basis, and we're looking for further upside here, hopefully up towards a resistance line there from January, heading up towards as high as $12 or even $12.50 over the next 1 to 2 months. The plus points as far as, or the plus point as far as this setup over and above the neckline break is the bear trap that we had during the over the last week, just narrowly breaking the late October support there at $3.88. On to a stock which has become something of a staple here. It's Fcel Energy. No prizes, I suppose, on the fundamental front for guessing why it's appearing again and again, but here we've had a vertical move over the last month, and the current situation is that we've had a gap to the upside, which provides, if nothing else, a sort of stop loss area for people who are trying to chase a stock higher. The high on Wednesday was $8.86, and while we're above that on an end of day close basis, we're looking for the next resistance line target from back in November last year, which is around the $12.20 level. Hopefully that will be hit sometime over the next 2 to 4 weeks. Stock which is looking equally interesting at the moment is Fisker. That's already had decent rises in the recent past, but we've broken neckline resistance for the shares around the $18.28 level, and while we're above that, looking for as high as $25 at that late July resistance line projection. If you want to try and tighten up the stop loss a little bit, then $19.28 on an end of day close basis could fit the bill, given that that level was the or is the current intraday low for the session. Onto a stock which is rather famous and probably will continue to be famous for quite a long time, Mrna. Depending on obviously how the whole vaccine scenario pans out. Here we've had a gap through the top of the rising trend channel from May. The gap there, top of the gap there, around $117, and while we're above that on an end of day close basis, we could see the shares hit a February resistance line projection, currently pointing as high as $1.55, but at this stage only back below today's intraday support at $114.86, really delaying the upside scenario. If you're looking for a tighter stop, I suppose half the daily range at the moment would fit the bill, which would be around, which mean we were looking around the $122 area as a stop loss. Moving on to a stock which has had quite a lot of coverage here of late on the basis of its recovery credentials. Here you can see that we had the break and the gap through the 50-day moving average just the other week. Now we've had, we're attempting a triangle breakout. Support line there around the 18.8 cents level, if that makes sense, as a level to trade against. And while we're above that, looking for a retest of the current November peak at around the 33 cents level. So at least, if nothing else, we've got a reasonable risk reward on Naked Brand at the moment, above 18, looking for up to 30 cents. Moving along to a stock which you'd expect to do well at the moment, I suppose, Nano Dimension, type of tech winner that is all over the place at the moment. Here we've had a gap through the old October resistance. That was around $6, and while we're above that level on an end-of-day close basis, looking for a January resistance line projection target as high as $8.50, hopefully by the end of next month, and back by the way that we've had the gap higher. Moving along to a stock which is certainly new to this particular sweep. Here we have Ormp Pharmaceuticals, and new to the highlights, that is. Here we've got the shares breaking that August resistance area around $4, and while we're above $4 on an end-of-day close basis, looking for a February resistance line, or rather March resistance line projection, currently pointing as high as $5.90, hopefully as soon as the end of next month. Now a stock which sounds slightly out of date compared to others in this selection, but here we've got Freight Car America. Sounds like a sort of a 19th century company, not a 21st century company, but here you see that the shares have broken resistance on the way down, which was at $2.51 in October, and an end-of-day close or end-of-week close above that level today could see the stock of Freight Car head towards a January resistance line projection, currently pointing at $4, and hopefully that will be by the end of next month, i.e. December. On to stock which has been covered here before and is almost worth covering just on the basis of its rather poetic name, Sundial Growers. Here you can see that it's all about the 50-day moving average for this stock. We've gapped higher earlier in the week, and while we hold above the recent swing low around the 26 cents level, looking for a retest of initial November resistance at 60 cents as soon as the end of next month. You can see that the 200-day moving average at 60 cents is also in the frame as a natural technical resistance level for this particular market. On to one of the favorites, one could say, in terms of the US stock highlights of the recent past. Here we've got Renault Solar, and not surprisingly the shares in the current environment with the renewables, etc., has gapped higher through the previous target of $6 while we're above that level, looking for a July 2019 resistance line projection, currently pointing as high as $10. Hopefully that could be seen as soon as the end of next month. Last one of the day, last one of the week is a stock which is in the sort of the pharma area, and obviously these particular companies have done rather well of late. This one not so much in terms of the share price, but we've gapped higher today after gapping down at the beginning of the month, so that we've got a sort of island gap feature, and at least while we're above that October resistance line at $7.50, we're looking for a retest of October resistance itself at $12 plus, hopefully as soon as the end of next month. If you're cautious on the stock, you'd wait for an end of day close back above the 50-day moving average. That's running around the $8.67 level. That's it for me today. Join me again next week.